Hey, what's up guys, Houston here. And for those of you just finding my YouTube channel, welcome. Please remember to hit that subscribe button and that bell. And for those of you that's been following me, as always, salute. As well as my patrons for supporting me, double salute. Now, today's video, we're actually going to be talking about how to fix your bad credit. See, there's a system, there's a certain way you need to focus on how to fix your bad credit to boost up the credit score, okay? And I'm going to share some of those things with you, but I wanted to let you guys know. They started rolling out where they're texting you. If you have a collections, they're starting to roll out where they'll text you and they'll lie and say, hey, we tried to send you a letter, text back to this number to contact us. What you need to do, if they send you that text and you owe a collection, you need to type the word stop, S-T-O-P, in capital letters, okay? If you do that, they can no longer send you out any more text messages, okay? So if you have a collections, an old outdated account, and you receive a text that says, hey, we tried to send you a letter, again, make sure you send them a text back with the word stop. That's all you need, S-T-O-P in capital letters, okay? And this is going to go back to them, and so they no longer can contact you through text, all right? A lot of people are not aware of this, so I'm wanting to share this with the community so at least you'll have something on your side. If they do reach out to you again, make sure you take a screenshot, and they try to make a second attempt, a third attempt, screenshot it. Now you can file a complaint with the CFPB for harassment, and you can actually sue the collection company. Okay, so I just wanted to bring that to you guys' attention so that way if you receive any of those type of data messages and they're harassing you, that'll stop it. Okay, now let's talk about how to fix your bad credit. All right, now here's something that a lot of people don't know and they don't understand. The first thing in terms of fixing your bad credit, when you have when you pay late, okay? So here's what happens to your credit when you pay late, all right? The first 30 days, your credit score can go down between 40 to 80 points. 40 to 80 points, your credit score can go down. All right. Now, if you reach 90 days of late payments and you're at the charge-off status, now your credit score can go down 100 points. All right. One of the things, and I've been talking to clients about this, if you can save the account, if you have a 30-day or 60-day late, then I would definitely tell you to save the account. The reason is because if you're able to make consistent payments between 9 to 10 months, what's going to happen, that late payment is going to start not being as impacted on your credit, okay? So that's the reason I tell people to save the account. Now, if you have a whole lot of debt, a whole lot of credit card debt and things of that nature, I always tell people, set yourself up on the debt snowball. And in terms of the debt snowball, that means you have $100, $350, $500, right? And so you pay the $100 off, we're still making the minimum payments on the other two accounts. Once you have this account paid off, then you start focusing on the next one. Now, the reason that you want to do that, again, because it's going to increase your credit score. All right, so go from the smallest to the largest. Now there is a different system to save you more money, but at the same time, right now, we're trying to fix the credit, we're trying to save the credit, so you want to use the debt snowball. Do not close the accounts, okay? Please do not close your accounts, all right? Just pay them off, all right? And then you'll see your credit score increase like that as well, all right? Now, here's something I wanted to explain to you guys about medical bills. Now, here's the thing about it with medical bills. With medical bills, the only time that they're going to report is when you're past 60 days late. Now, this is very important. A lot of you guys may have had medical bills, right? And your insurance company supposedly paid those medical bills, right? But here's the thing about it, okay? Working for the government and looking at different types of bills, different accounts and everything, here's the thing about it. You have a doctor visit bill, you have a copay bill, you have a bill to see the doctor, and a bill for the facility. So you're going to see about 4 different things. Now, your insurance company, most of the time, they will cover all 4 of those. However, sometimes the insurance company, you may have to go to a specialist or something like that. Now, if you go to a specialist or something like that, and they may have a different type of bill and the insurance company doesn't cover that, then you need to reach out to the insurance company to get clarification. Again, this medical bills that are outstanding, it will not show up on your credit for at least 60 days, okay? But you need to understand how the medical billing situation works. Now, here's another tip that I want to let you guys know, and this is something that I continue to tell you. When I tell you guys, do not mess up your relationship with Navy Federal. Navy Federal, they're very flexible, okay? And so what happens, if you go past 30 days late, they're not going to report it. They understand. If you go past 60 days late, now they will report that account. So again, to save your relationship with Navy Federal, do not let it go past 60 days. Again, I would always try to make sure that I would make my regular monthly payments. Now, here's something else that you have to understand. Always with your financial institutions, get them on the phone. If you lost a job or you're financially strained because someone in the household have lost income and stuff like that, you definitely want to be able to communicate with your financial institution so that they possibly can put you on a financial hardship. All right? And you want to also make sure that you get it in writing in terms of they agreeing to either allow you to miss a payment, especially like if you have a car payment. Most card lenders, they will allow you to miss a payment, okay? So what you do, you call them up and say, hey, I'm not able to make my payment this month. And what they usually do, they'll tack it on to the back end, all right? So that way you don't ignore paying your bills, and that way you still keep your good credit, all right? Because many people talking about, well, credit is important. That's a lie. Trust me, you're going to need your credit. There's some ugly situations that are brewing right now, and a lot of people that are quitting their jobs because of the mandate on vaccinations and stuff like that. You don't want to be in a position to where you don't have nothing that's going to support you. So that's the reason that I'm trying to tell you this. Now, number 2, here's another thing that would drastically hurt your credit score. Number 2, max out credit card. Now, In terms of you maxing it out, you're averaging between 25 to 50 points that your credit score will drop. Okay, so you definitely want to try to keep your utilization down low. Now here's the thing about it, like with credit card companies, they're going to send you out checks that says 0 interest for maybe 2 years or 1 year, right? 1 or 2 years on that credit card. So here's the thing about it. That's like free money with no interest on it, right? What do most people do? They take the whole thing, right? Because they may be trying to buy a car, they may be trying to start a business, they may be trying to do financial investments and stuff like that. Well, here's the problem with that. When you go over that 30% threshold, guess what? Your credit score tanks. Now that your credit score went down, guess what? Your other credit card companies, if they see this, and a lot of times they do soft pulls and stuff, what they would do, they would increase your interest rate on your other credit cards. So again, they may be offering you 0% interest, and it may be a good opportunity. Now, if you're able to pay it back within 30 days, then great. Okay, but at the same time, if it was a business credit card that only reports on the business, I would say go for it. But not on the personal cards. You do not want to do that on the personal cards because it's going to hurt your credit. Okay, it's going to hurt your credit because you went over the 30% utilization, and because other creditors see this, basically maxing out a credit card, guess what? They're going to increase your interest rate. So that's the reason you don't want to do that. So please, if you don't have any other choice, then I would say go for it. But if you can avoid it, please do at all costs, okay? Now, here's another thing. Number 3. Apply for multiple cards at once. Okay? Now, understanding this, you may decide, okay, I don't have that many inquiries. I may have 2 inquiries. So then you start just applying for 3, 4, 5 cards, right? Well, now your inquiries are building up. Now, please understand, all financial institutions except for Capital One, they're only going to do an inquiry on one separate bureau. With Capital One, they're going to do an inquiry on all 3. Okay, so this is one of the reasons I tell people, please be careful and really consider if you really want a card with Capital One, because it's going to put 3 inquiries instead of just 1. Okay, so you want to be careful there. But at the same time, applying for too many cards at once, this will drop your credit score, not only because of the hard inquiries, but because when you have new accounts, okay, now you're starting to re-age the file. All right, so it will drop your credit score temporarily. All right, it may be between 30 to 90 days or whatever. You're like, well, why did my credit score drop, and how can I get it back up? You have to have enough, when those new accounts hit your credit and stuff, it has to pick up in the system. There has to be enough data and stuff like that on it, so that way it can catch up with your file. But even like with lenders, when they see you have multiple approvals on credit cards and stuff, then lenders will like, well, no, we can't approve you because you have too much new credit. Okay, so you have to understand this. So again, it's to give you leverage. Now here's a big one that I really want you all to understand. Closing accounts. And this is a twofer on this situation, all right? So, you know how you have those high interest rate credit cards to help rebuild your credit and stuff like that, and you had them for 2+ years or whatever, right? And they're only like $300 limits and stuff like that, right? Well, because that file has 2 years of history, you don't want to close it. If it was 1 year, then I would say, yeah, okay, it's not that important. But if it's 2 years, you do not want to close that card because it's going to hurt your credit history. Okay, do not close that card. All right. Now, they may have an annual fee that they charge, and that's okay. Or, you know, but make sure that you do not close that card. Now, here's one thing that I'm going to tell you guys. Saucony Bank, they have a very bad history. When you get approved for a card and you haven't used it for a long time or whatever, and then you pay it off, they'll close the account with no reason. So if you ever had an account that was in good standing with Saucony Bank or any other financial institution and they just closed it, you never had any late payments, you made all your payments on time and stuff like that, and it has over 2 years of history, you're going to send a letter to CFPB. You send a letter to CFPB because if you send a letter to CFPB stating that, hey, this account has always been in good standing, okay? I never missed any payments on it. I always made my payments and stuff like that. This has some history to my credit file, and they closed the account and it dropped my credit score. You send that letter over to CFPB. CFPB is going to reach out to Saucony Bank, and they're going to have to open that account up. So even if you have like accounts that you've been using, and you may have used an AU and stuff like that, added people on as AU and the bank just closed it, send a letter to CFPB. They cannot close your account without giving an actual definitive reason, especially if you have good payment history and you never did anything wrong with the account. Okay, so that's the reason it's very important that you guys know this. I know a lot of people that talk about credit, talk about how to fix credit, but you need to understand that this is the information you need to know in order to help you fix your credit. Okay, this is very important. Now, that being said, let's talk about monitoring your credit. Number 5, okay? Now you said, well, Houston, how does monitoring my credit going to fix my credit? Well, here's the thing about it. There are people out there that are using CPN numbers, credit privacy numbers, okay? And they may have cross-referenced your address with somebody else's address, okay? And they may have put some data on your credit file that you don't know nothing about. There have been people that ended up with a whole lot of inquiries and they're like, hey, what's going on here? I never applied for any of these. So that's the reason it's important for you to monitor your credit, so if there's any accurate data that's on there, you can remove it off, okay? Because this inaccurate data or accounts that they put on your file is going to hurt your credit score, okay? They may have accounts that have been past the statutes. They may have accounts that, again, outdated accounts that may have been a relative of yours. You stayed in the same household and they put those accounts on your credit file. So that's the reason you have to monitor your credit, okay? And I would tell you the best credit monitoring service, I'll put a link below, but the best credit monitoring service, I know there's Identity IQ, I know there's Experian and stuff like that. But if you want to get the best, that's my FICO. Okay, I'll put a link, and it costs, but at the same time, their system, because it gives you more data points, it pulls in more information, you'll have a better understanding of what's going on with your credit file. Okay, so that's the reason that I'm sharing this with you. All right, let's talk about number 6. Number 6, adding AU, or authorized users, right? Excuse me. Adding authorized users. Now here's another thing that a lot of people are not even aware. Now we know that some authorized users, if you have a new account you just got approved for, and you add somebody on to the as an authorized user to build up their credit, it's not. The account is too new. Okay? That's the reason, like, well, authorized users, no. It's because the account they added you on is too new. There's no credit history on it. There's not enough payment history on it. So that's the reason that you may not see the impact. Now, in terms of, there are some creditors where you may not pick up the credit history, but you will pick up the payment history, will still give you a boost in the credit score. So again, where people say authorized users don't work, that's not the case. Just keep in mind, if this is a brand new account, it's not going to help you. If it's an account that will report the history, the payment history, but not the time of open date or whatever, that will still influence your credit score. Okay, so just keep that in mind. And here's one more thing about adding authorized users. If somebody has added you on as an authorized user, what you need to do, if their account went bad and it's been charged off, it went to collection, of course, that's bringing down your credit score. So what you would have to do, you would have to reach out to the financial institution, okay? And you would request that they remove you as an authorized user. You can do it yourself. You call them up, tell them that you want to remove yourself as an authorized user, and they will do it, okay? Now, if you do that, you would also see a jump in your credit score. So if you have old authorized users that went bad, that are still reporting on your file, call the financial institution and get yourself removed. Okay? By you getting yourself removed, then you'll see an increase in your credit score. Alright? So that's very important. Now, number 7, short credit history. Alright? Now the reason this is important, because a lot of people out there, they may have only just been using cash to buy everything, okay? So even though they're maybe 35, 40, 50 years old, but they always use cash, okay? So then when they're trying to build up their credit, trying to get approved and stuff like that, because they have such a short credit history, that's the reason their credit score. As a matter of fact, like Vantage will give you a credit score faster than FICO. And the reason is because of the short credit history. If you're trying to start your credit file with, and you're looking at your FICO and it says you don't have enough data, then what you would have to do, you would have to sign up for Experian Boost. You would, I would tell you to get a secured card and a secured loan, okay? And so by you getting those, and if you can, get maybe 1 or 2 authorized users. If you do that, then what happened, you would see you almost automatically, your credit score, you should be about maybe above 720, 740 credit score. Now, I have seen people with only 1 account and they got an 800 credit score because the credit file they got the authorized user from was a strong credit file. Okay, but for the most part, in terms of when you have a short credit history, the fastest way to get some history again is the right authorized users. Sign up for Experian Boost. I think TransUnion has a system now called Ultra FICO or something like that, or Ultra Boost or something like that. I'm almost certain that they had started doing that. But at the same time, making sure that you get your rent reported. You can go through Boom, or you can also go through Rent Reporter. So that way your rent is being reported as well. So that way you have positive trade lines to help get your credit score up. Alright. Now in terms of, that goes into number 8. And number 8 was thin file. So the same information. Short credit history, thin file. Again, when you have a thin file, same thing. You just need to add trade lines and stuff. Don't go out applying for a whole lot of stuff right away. The best thing to do, again, and I would tell you, the best thing for you to do is, if you have a thin credit file, go to your credit union, open up a secured card, open up a secured loan. Okay? And then, like I said, Experian Boost and add in your rent. Same thing. So with a short credit history file or a thin file, just apply the same tactics and you'll be able to increase your credit score. Now, what I want to talk about is, and we talked about this earlier, number 9, is hard inquiries. Now, there's a lot of people out there that they're getting a lot of hard inquiries and stuff, and they're trying to remove them right away. And I keep telling people, if you have new accounts, do not challenge the hard inquiry, because it will go into fraud status and they will lock up the account most of the time. Not 100% of the time, but most of the time. So if you want to keep the account, do not challenge that AU. Now, in terms of hard inquiries, you can be going anywhere from 1 to 12 points. So if it's credit cards, if it's a mortgage or something like that, the higher the loan or whatever, the higher points you may be missing out on when you get that hard inquiry. Alright? Now, here's something that's baffling, because a lot of people are like, wait a minute, this should help my credit. Well, this here actually hurts your credit. Number 10, when you pay off loan. Now, you're like, wait a minute. If I pay a loan off, my DTI goes down, so doesn't that mean my credit score goes up? Nope. Doesn't work like that. Because you have to have a credit mix. Revolving credit, you have to have a secured loan on there. Car loan would help. Student loans will help. Even child support. That's the reason I tell people, if child support is reporting on your credit, that's a trade line. And just make sure you make your payments and stuff. So if you got child support reporting on your credit and they're reporting monthly, keep on making your child support, because that's a positive trade line. Alright? So always think of it like that. Now, understand when you pay off a loan, you can lose anywhere from 40 to 60 points. I had a guy, he thought that he was doing good because he paid off a loan, and would end up, his credit score dropped 40 points. He thought he was doing good. So this is the reason, like, even though it's a debt and you're trying to get out of debt, well, you have to also have that credit mix.